Ladies and gentlemen, good day and welcome to the Eldeco Housing and Industries Limited Q2 and H1 FY2024 earnings conference call. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek from EY Investor Relations. Thank you, and over to you, sir.
Thank you. Thank you and good afternoon, everyone, joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with the business risk that could cause future results, performance, or achievement to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchange and on our company's website. Should you need any assistance to receive them, you can write to us and we'll be happy to send them over. Today we have on the call Senior Management of Eldeco Housing and Industries Limited. This is represented by Mr. Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Sanjay Agarwal, Group President, Accounts and Taxation. We will begin with the highlights for the quarter, followed by Q&A. Now I would like to hand over the call to Mr. Manish Jaiswal for his opening remarks. Over to you, sir.
Thank you, Abhishek. Good afternoon, everyone. I am Manish Jaiswal. Thank you for joining us today on the earnings call to discuss our company's performance during the second quarter and half year of fiscal year 2024. I am pleased to report that our company has continued to maintain a steady performance during this period. There have been several key factors contributing to this success. We begin with few comments on real estate market, after which I will discuss operational and financial results for the second quarter ended September 2023. The real estate market in Lucknow is on an upward trajectory, witnessing a consistent rise in demand, both residential and commercial properties. The growth is largely attributed to the city's ongoing infrastructure enhancements and improved connectivity. At Eldeco, we remain aligned with this trend, strategically increasing our supply in this market to continuously meet the rising demand. Moving on to operational highlights for the company. It was a relatively quiet quarter for us, speaking based on the account reporting, as no new projects were entered. However, the sales bookings of Latitude 7, which was introduced in late Q1 FY2024, gained significant momentum during Q2 FY2024. Based on the allotments done, we achieved a modest year-on-year growth of 6.5% in bookings, reaching a sales booking value of 24.7 crores. The total collections in Q2 FY2024 amounted to 38.6 crores. During the same period, we successfully delivered around 36,000 square feet worth of area, that is around 30 homes, who are delighted customers by giving registries to them. Turning our attention to our new launches in Latitude, which is our most recent launch, we have already allotted 41 units till September 2020. Based on the pre-commitments we have already received on the sales side, the project is expected to boost both the sales booking numbers and collection numbers significantly in Q2 of FY2024. Furthermore, as part of our efforts to strengthen our supply, we are now gearing up for the highly anticipated launch of Interior Phase 2. For which the layout was approved in September 2023, and RERA is expected to be received within the next couple of weeks. This is going to be our most significant launch this year, with a sale area of approximately 6.3 lakh square feet, spread across 28 acres. Basically, we are in the process of seeking RERA registration for our luxury high-rise project and opportunity on Sheikh Path, for which the layout was also approved in September 2023. We are in the process of applying for RERA for the same. Both projects are set to augment our portfolio by approximately 11 square feet worth of land area in this phase. In parallel, our commitment to expanding our land holdings has yielded results. With successful acquisition of 18.1 hectares of fuel that we have acquired between July 2020 and 2023. This achievement is part of our ongoing land irrigation strategy. We plan to continue expanding our portfolio in the coming years as well. In the Q2 FY24, we secured substantial funding of around 160 crores from two separate lenders, Piramal and ICICI Bank. Out of this, around 80 crores has already been allocated and effectively deployed to support our expansion and development initiatives. We are confident that combination of existing inventory and substantial number of upcoming launches that we have in pipeline would be instrumental in achieving our supply chain objectives. While H1 FY24 may have been subdued, we anticipate a more promising outlook for the company in H2 of current financial year. As we near the festive season, we want to assure you that we are fully prepared to meet the increased market demand, thanks to the success of our recent launch of Latitude 27 and pipeline of new projects in the name of Area Phase 2 and Infinity. The demand for high quality real estate continues to be strong in Lucknow, and we are strategically positioned to seize this promising opportunity. Moving on to our Q2 and H1 FY24 financial performance. The consolidated revenue from operations was 17.1 crore in Q2 FY24 compared to 32.9 crores in Q2 FY23. During H1 FY24, the revenues stood at around 41.9 crores compared to 60.5 crores in H1 FY23. The consolidated EBITDA was at 7.4 crores in Q2 FY24 compared to 9.6 crores in Q2 FY23. EBITDA margin remained high at 13.6% in Q2 FY24 compared to 29.1% in Q2 FY23. The H1 FY24 EBITDA was at 15.2 crores compared to 30.9 crores in H1 FY23. The EBITDA margins for H1 FY24 stood at 36.4% compared to 34.5% in H1 FY23. The company's consolidated profit after tax stood at 6.4 crores in Q2 FY24 as compared to 8.9 crores in Q2 FY23. During H1 FY24, the PAT was at 10 crores versus 19 crores in H1 FY23. With this, I would like to open the floor for questions. Thank you.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets for asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Kunal Tokas from Fair Value Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, sir. Please go ahead.
Okay. Thank you for the opportunity. And my first question was about the number of subsidiaries that we have. So we had the FY23 annual report. We had 40 subsidiaries and we had incorporated 6 more in FY23. So I wanted to know what the reason for having so many subsidiaries was and why we cannot have a more leaner, more simpler structure. That's my first question.
Any other question or should I answer?
I have more questions. You want me to?
Yeah, please. It would be great if you can complete the questions.
All right. My second question was related. So in FY23 also, we had given a loan of, we had outstanding loan of around 41 crore to Eldeco Infra and Properties, and we had given a further loan of 5.5 crore. I wanted to understand the nature of the outstanding and by when can we expect the recovery of the loan. And we also had total advances to subsidiaries to the tune of around 98.6 crore. So I wanted to understand the reason for that. My third question was that we have acquired land parcels in cities like Gurugram, Sonipat, Ludhiana, and Noida. So can you help me understand what the approximate land area that we have now, and when can we expect to start completing the projects on these land parcels? And also, like, what your vision is for the next 3 to 5 years? Like, what kind of revenues are you expecting from your new projects like Trinity, like 27 Imperia, and how much can they contribute to our total revenues in the next 3 to 5 years? Those are my questions.
All right. So I'll start with the first question, which is basically on the number of subsidiaries that we have in our organization. There are, a couple of reasons why we need to have multiple subsidiaries while operating in our business. When we do land acquisition, there is an aggregation. There is a Land Ceiling Act which we have to respect, based on which there's a limit to a certain range of land that you can acquire in one subsidiary. And when we are doing a township acquisition, it is very regular for any developer or any land aggregator to basically acquire the bigger land parcel in multiple subsidiaries or SPVs, so that they do not circumvent the law. And second point related to the same question is, it is also prudent practice to basically have new projects in new subsidiaries. This practice has evolved after a lot of new compliance requirements that came into the industry, like data compliance, etc. This allows one project to relatively operate in a one subsidiary or one SPV or a separate SPV in which no other project is there, by effectively avoiding the cross liabilities that will come up due to customer issues or due to approval issues that may impact one specific project in the overall company.
Okay.
Is that answer your question?
Yes, sir.
Well, second question is regarding the loan that has been given to EIPL. Well, that loan has actually been given under a commercial understanding. It's a very protected commercial understanding, and we have already shared the details of that with the analysts, with the investors in these calls that we've been having here, and also in the presentation that we submit in the stock exchange. So basically, the investment that allows EHIL to basically explore a market other than Lucknow in a protected manner, in which the minimum guaranteed return to EHIL is protected, while figuring out if this experiment of going out to Lucknow will be successful or not. This has done very well. This investment has done fairly well for the organization. Based on which we are also now evaluating if this experiment which was done in a protected environment can be replicated in other markets as well. So that money is basically, I would say, it's the assured guaranteed return or the beneficial 50% beneficial return project. Whatever is higher is the return that gets feedback to EHIL in this. I believe that the Delhi project next year should be the time when we should be in a position to apply for OC in the Delhi project, post which the distribution would happen in this particular project, and this investment would be repaid back accordingly. Third question is... Yeah.
Sorry, sir. This was in regard to the 41 crore loan outstanding to Eldeco Infra, right?
Right.
Okay.
Third question is related to the advances to the subsidiary. So when, the fundraising that has recently been done, it has happened in EHIL, and when the recent acquisitions were done, in last quarter, we did 15 acres worth of acquisition. We spent around 85 crore in land acquisition in the last quarter. Typically, when the acquisition is done in the subsidiary, but the funding is raised in the holding company, EHIL, which is why these advances are shown to various subsidiaries. Most of this money is basically utilized for land acquisition in these subsidiaries.
Let's see.
Fourth question is related to projects that the group has recently acquired in various markets like Gurgaon, Sonipat, Ludhiana, other than Lucknow. As you would be aware, that EHIL is a listed entity which is focused on the Lucknow market, and the group has another entity which is unlisted, which is operating in all of the markets other than Lucknow. So these projects have been acquired in the unlisted entity. Fifth question related to guidance for 5 years. So typically as a policy, we do not provide future guidance, but based on the information that we have already disclosed today. So we are, this year we are to more than double our sales that we did last year. I think last year it was around 100 crore, and a year before that it was around 250 crores or so. This year we are hoping that the number should be double of last year, maybe more than that. The inventory that will be releasing other than what we have already released is basically the two projects, phase 2 and Eldeco Trinity. Between the two, we have 11 lakh square feet of inventory that is getting released. While I would not like to disclose the actual pricing at this point at which we will be releasing this inventory in the market, but even if you do a quick calculation based on average realization that we have achieved in last quarter, which is 4,600 or so, and multiply that by 11 lakh square feet, the number would be somewhere around 500 crore, that range or so.
Okay, sir.
So
I understand.
that plus whatever we have sold already up till now in this year, including in the recent launch of Latitude 57. All of these projects should get delivered in next 3 to 4 years, and their revenue should be recognized in the post delivery. I think next year we would also be in a position where our Imperial phase 1 would be delivered, their application would be received, and those projects should also be in a position to be recognized in the accounts.
Okay, sir, I understand. Thank you for answering my questions.
Thank you. The next question is from the line of Ms. Monica Arora. Please go ahead.
Thank you for the opportunity and congratulations on robust margin numbers. My first question is, what is the average realization of the new project, like Imperial 2 and Trinity? My second question would be any guidance on what would be the incremental collections in the next 2 years? And also, if you could just give me the numbers, have been a little bit muted into this quarter. So how do you look forward towards FY25? Those are a few questions.
Thanks for these questions, Monica. So I'll start from the last question. As per the financial numbers during this quarter, these numbers reflect the period performance. of the projects which were launched 3-4 years back, which got delivered within, say, last H1, and on which the units are getting registered in favor of customers now. So the account performance is basically the reflection of the actual registries that we do in favor of customers, and the real indicator of our current latest performance, current period performance would be, the land which we have acquired in last quarter, or the new approvals that we have received in the last quarter, the project launches that have been lined up for the project launches that have been lined up that will come up in coming months, the new fundraise that we have done, and also the performance that we have achieved on the sales bookings of recent launch Latitude 27. So on those parameters, I think numbers are extremely robust. But as far as the financial accounting numbers are concerned, the revenue that is recognized, as I said, it's how the revenue is recognized, the policy of revenue recognition is there in the real estate, and based on which those numbers reflect the period performance of the organization, like operating performance of the organization 3-4 years back. Does that answer your last question?
Thank you so much, sir, and this was really detailed. Thanks.
So other two questions are basically kind of related to the future guidance.
Yeah.
Just answered in the Kunal also. So we typically, as I said, we typically do not give future guidance, but based on what we already disclosed in the market, 11 lakh square feet has been released between Eldeco and Imperia 2. Imperia, the last sales that has been done that project was about 4,000, I think 4,200 rupees per square feet. We yet to come out for Imperia phase 2, 6.3 lakh square feet. But I would assume that it would be in the similar range of 4,000 to 4,500. As far as Trinity is concerned, it's a luxury project, high-rise. It's located at Shahid Park, which is one of the most common luxury locations right now in Lucknow, and it has got phenomenal views of the river and the trees in front of it. So we believe that the pricing of that could be anywhere between 6,500 to 7,500 very easily, much more. But I think the actual pricing would only come out when we are closer to launch and we are release the inventory in the market.
Sure. That's it from my side.
Great.
Thank you so much. A reminder to all participants, if you wish to join the question queue, please press star and 1. The next question is from the line of Nitin Deveria from Prithvi Finma. Please go ahead.
Thank you for the opportunity, sir. So we're relatively new to the company. So just on a macro point, I want to understand this. Since we are focused on Lucknow market and we see there's a development going on there. So from a sales perspective, I just wanted to understand what is the purchase pattern over there? Housing demand that we are seeing, is it coming from the locals moving into apartments, or can we see it as a migration demand that Lucknow is facing? Since we're concentrated in one city, just wanted to get an understanding on that.
So Lucknow, as a city, it has very interesting dynamics. It's a capital city. It's a center of government for UP government. It is where the headquarters of all UP government organizations are located. Any private organization, if it has to open up their headquarters in UP, which is the biggest state by population in the country, they open up their headquarters in Lucknow. Within UP also, there is a lot of migration that keeps on happening. Sometimes it is transient migration, sometimes it is permanent migration. Various cities of UP to Lucknow, because Lucknow has great social infrastructure. It has got great schools, very well-known schools. It has got Vedanta, which is a very well-known hospital. It has got multiple big malls. The infrastructure is, the road infrastructure, etc., is very good. The facilities are immense. So a lot of people within UP also sometimes, they shift, they either shift or they plan at post-retirement, they may consider to shift to Lucknow. So a lot of those buyers are also there to keep buying from outside. As I said, because Lucknow is a seat of government, it's the capital city, it's where the headquarters of all private companies who come to UP, those are also there. There is a phenomenal demand within Lucknow also from these buyers. As far as the reference to asset class is concerned, I would say we have seen equally good demand coming both from apartments as well as from independent housing units. Lately, in the city center places like Gomtinagar, Shahid, it's next to impossible to basically come out with the new township land. And most of the projects that are getting launched over there because of paucity of land are group housing projects. So in those locations, whatever new absorption that happens, it typically happens in group housing projects only. But in outskirts of the Lucknow city, it is still relatively easy to acquire large land parcels and township projects, which allows an opportunity for a lot of buyers to purchase villas or plots, etc. also.
Understood. That was really detailed. So just wanted to understand one more thing. Are we looking at other markets other than Lucknow in the vicinity, or for the next 3 years, maybe we just focus on Lucknow as a market?
The primary focus still remains Lucknow. But as I said, we tried our hand by evaluating this opportunity in Bareilly. And that experiment turned out decently well. And with that, emboldened by that, it's kind of open to look at some more opportunities also with our cities in Lucknow, and which can easily be managed by our team, which is stationed in Lucknow only.
Understood. So my second question is, it was just more on a clarification side. So you mentioned that there is one, the unlisted entity of Eldeco is the one acquiring land parcels in other than Lucknow market. So is there a sort of understanding between the two, like you are only focused on Lucknow and residential would not be taken up in Lucknow won't be taken up by the other unlisted entity? Like how does it go? Do we have sort of understanding?
Yeah, so because of legacy reasons, that's how the structure is. That this kind of exclusivity that the resident enjoys by operating in the Lucknow market, in which unlisted entity doesn't enter. And unlisted entity has been operating in these multiple markets other than Lucknow for quite some time.
Okay, got it. Sir, one last question, if I may.
Yeah, please, go ahead.
So in this H1, we purchased approximately 20 hectare land, as we have mentioned in the presentation. Sir, what is the idea behind it? Like, what projects are we planning, and when do we plan that?
So, see, out of this 20 acres, I think 3.2 acres is the land on which we are launching Eldeco Trinity on Shahid. It's around 5 lakh square feet luxury group housing. Other than that, rest of the land is basically still in aggregation mode. We are still acquiring more land parcels in these locations in which the 17 acre land was acquired. And for to ensure that the aggregation process is not disturbed, we do not disclose the location of the aggregation projects till they are fully acquired and licensed.
Oh, okay. Understood, sir. Okay. That's all from my side. Thank you, sir.
Thank you so much. A reminder to all the participants, If you wish to join the question queue, please press star and 1. The next question is from the line of Rishikesh from Robo Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So firstly, if you could touch upon the deliveries, how much deliveries are we looking to do in H2 and going ahead in FY25?
So as far as deliveries is concerned, I think we are very close to, we are working towards delivering Imperial Phase 2 and Twin Tower. We are hoping to apply for their completion certificate within either in Q4 or in early next financial year. And other than that, recently we have got completion for Regalia Arcade, we have got completion for Uday Joy, and East End, like those projects. Does that answer your question?
So basically, just wanted to get a sense on the reported revenues. On the reported revenues basis, we have been maybe around 17 crores this quarter, and we have been in this range of 30 crores, 40 crores kind of range. So what exactly can we do on the reporting basis for, if you could guide on that for this H2 and for next FY25?
So reporting revenue is basically based on, as I said, the decrease that we have done in the last quarter for the projects on which we have already received completion certificate. But these projects were launched 3-4 years back, and whatever 4 years for development, post which the completion was received, post which the registry happened. So the it's indicative of a period performance, the operating performance that happened 3-4 years back. But I think as we move forward, the project that we launched in FY22, FY23, those projects now would be getting delivered next year and a year after that. And the project that we launched this year would hopefully get delivered in 3-4 years' time. Those projects would actually would come into the recognized revenue category as they get delivered, and we do registries on those projects in favor of customers. So, as I just said, last quarter of this year or maybe early next year, we should be in a position where Twin Tower and Imperial Phase 1 should be getting completed. Imperial 2 and let's say Latitude, which we recently launched, it should be getting completed in next 4 years time frame from now. Imperial 2 should be getting delivered hopefully in next 3 years time frame from now, because it is a horizontal development project, it's not a high rise. Trinity again should take 5 years to deliver because it is a high rise. So as these projects get delivered, and the top line number for these projects are relatively larger as compared to the projects that we have done historically. So they should reflect in the recognized revenue numbers.
Okay, got it. And also the 2 projects that we are launching, Trinity and Phase 2, when are we looking to launch? Which quarter?
I think Imperial 2, we applied for, we got payout sanction in September. We applied for RERA immediately, and we should be RERA within this month itself for Imperial Phase 2. Post which we should be in a position to launch either this quarter, as in the ongoing quarter, or next quarter, which is Q4, is when Imperial 2 has a good visibility. And as far as Trinity is concerned, although we got the approval layout sanction in September, there were certain more formalities that needed to be done before applying for RERA. So we should be able to apply for RERA within the next 3 days and hopefully get RERA by January, in the end of January. So that should also be hopefully launched in Q4.
Okay, got it. Thank you.
Thank you. The next question is from the line of Samyak Sapre from Wealth Creek Capital. Please go ahead.
Sir, good afternoon, and thanks for the opportunity. I have a couple of questions. So this is, do we plan any strategic tie-up with any partners for accelerating our growth in Lucknow market? That is my first one.
So to answer this, basically, we, as part of our land acquisition and BD strategy, we always remain open to not just the outright acquisition, but also joint development partnership deals. So if we get a good opportunity, yes, we are open to tie up with the existing land partner as long as the numbers make sense. There is we do not foresee much partnership risk, and we can move on that front as well. I think the recent funding that we have done is also reflective of the funding partnership that with Wood Bank and Piramal Investe. We basically borrowed the money from them to help us acquire more land parcels in order to fund our expansion projects.
Okay. So any visibility of land parcels that we plan to acquire in coming H2?
Yeah, the land acquisition process that we have is ongoing, and we are looking to acquire some more land in H2 as well.
Okay. And just continuation of the first question, how do we plan to utilize the funds, specifically 160 crores, and would there be a need of any fresh debt as we see a good opportunity in Lucknow and other cities?
So thankfully, we have a good headroom in our balance sheet, and if need be, we can acquire more, or we can take more debt to acquire more land parcels. As of now, the acquisition that is happening, for that the funding is available thanks to our recent fundraise. But if there's any other good opportunity that comes up, and BD and land acquisition sometimes is also very opportunistic. While we keep looking for land as a funnel, and we keep evaluating various opportunities, and whenever we find a good opportunity which is kind of complying with all the criteria that we have on counterparty risk, on location, on IRR, on returns, approval risk, aggregation risk, etc., we just plunge on that particular opportunity. So that process of search for right opportunity that keeps on going on, and typically in the funding process essentially means that we look at 50 deals while before zeroing on one or two deals in that pipeline or funnel of 50, which are making sense on all fronts. So if we get such opportunity, yes, we are open to take more debt. But as of now, whatever acquisition is going on, whatever acquisition is currently planned for H2, that we have enough dry powder on enough bank accounts, so we don't need to.
Thanks for the detailed answer, and I wish you all the best.
Thank you.
Thank you so much. The next question is from the line of Guneet Singh from CCIPL. Please go ahead.
Hi, sir. Thank you for this opportunity. So, the pipeline for a future project, say 3 years or 4 years down the line, quite healthy for the future. In terms of reporting revenues, this was one of the weakest quarters in the last 3-4 years. So, I mean, for the coming for FY24 or FY25, even till FY26, I mean, should we before the 3 years after which our new projects would probably be delivered, before that, I mean, should we expect revenues to be done in line with what we saw this quarter?
Well, as I've explained that, the the reported numbers, specifically on the revenue side, are basically reflective of the performance that was operating performance of 3-4 years back. Getting registered this quarter is reflective of those numbers which those prices launched 3-4 years back. So for on that front, it would be not prudent to make any comment because it's how the projects are getting delivered and registries are happening in favor of customers. But as far as operating performance is concerned, as you rightly mentioned, and we work with also, there are fairly strong reporting numbers on new acquisition, fundraising, project pipeline, etc.
Got your point. I mean, but for say coming year, FY25, FY26, I mean, in terms of past performance of the company as well, I mean, should we expect the numbers to be muted like the quarter that we saw, or I mean, like you mentioned earlier that Twin Tower and Imperial Phase 1 should start getting delivered in FY25. So, I mean, actually, do we expect the numbers to be muted for FY25, FY26 reported numbers? Or, I mean, do we expect some growth over, say, FY23 numbers? I mean, that actually I want to understand. Because I understood the point that, say, FY27 onwards, we have healthy deliveries. But looking at the reported numbers as well, in terms of, I mean, being a part of the investor community, I would like to understand, I mean, how the reported numbers might shape directly for FY25, FY26 as well. I mean, should we expect them at least to maintain at FY23 levels? Or, I mean, how should we look at it?
Well, we do have a policy of making fixed guidance in these calls. But between Twin Tower and Imperial Phase 1, I think there's enough top-line numbers, booking numbers, which have already been achieved, which can allow us to basically show more strength on the reported numbers, revenue numbers than what you have seen in this quarter.
All right, sir. Got it. So both of these would be delivered in FY2, right?
So both of these or one of these, it has to be either Q4 or Q4 of financial year or Q1 of FY25.
All right, sir. Got it. And apart from these two, do we have any other major projects which would be delivered in FY25 or FY26?
In FY25. So FY26. Hello.
Hello.
I think able to reach Kapil, but see, Regalia, Arcade, Joy, East End, Gloria Arcade, there's some more inventory in Regalia and City, Saubhagya, which should also get reflected in the FY25. FY24, sorry.
All right, sir. Got it. That's all from my side. Thank you.
Thank you so much. Reminder to all participants who wish to ask questions may please press star and 1 at this time. The next participant question is from the line of Karan Premchand Gupta from Cavi Capital. Please go ahead.
Yeah, thank you for the opportunity and greetings. I wanted to get your, just some commentary on what your expectations were for the Eldeco Latitude bookings for this quarter. I understand that this project was launched in July, so you had access to the entire quarter bookings and whether it was up to expectations and how things are going in the current quarter with the festive season and obviously a high sales season for you.
So we have already allotted around 50% of sales that has already been done in Latitude, which is around 41 units or so. And based on the commitments which are yet to be allotted, I would say that the project has performed fairly well, and it should contribute more significantly to the booking numbers and collection also in H2, which is when a lot of the commitments that we have received that we have not allotted till H1, those should be better, but allotted and should be reflected in the booking numbers.
So currently, out of the total saleable area of about 5 lakh square foot, how much is available for sale?
Well, we have opened there are 5 towers, broadly speaking, a lakh square feet each. We opened 2 towers to start with, which is 2 lakh square feet. And recently, we are working towards opening the 3rd tower this festive season for the sales.
Out of the area that was allotted to the partner, about 35,000 square feet, so that is out of the 2 towers that were already open, or is that across the entire project?
So can you please repeat that?
Right. So in your presentation, for Latitude 57, there is a line item that says area allotted to partner, which is about 44,200 square feet.
That is part of the towers which are already open.
Okay. All right. So, and these 2 towers that were open, how many units are there in total?
Well, I don't have exact numbers, but I would think, broadly speaking, 2 lakh square feet, and in terms of numbers, the average would be 1,700, 1,800 square feet. So around 120 or so, 125, something like that.
And earlier, even during the last summit, Abhiraj had given a guidance, and you also spoke about basically doubling your booking this year compared to last year, so roughly around 200 to 220 crores. Out of that, how much have you earmarked for the Imperial Phase 2 and Trinity?
Well, I would think between Imperial Phase 2 and Trinity, around 50%, 60% of that number would be there.
Okay. And just one last question. So, based on the current construction costs and your realizations, what kind of EBITDA margin should one expect, the next 2-3 years once these projects actually get on your books?
So I think the question is whether the kind of EBITDA margins that we have been achieving up till now is that sustainable or not. I think the EBITDA margins that we are achieving up till now, to answer this, are kind of very high. They are the highest in the industry. Typically in real estate, these high EBITDA margins are not there. And the primary reason for that is that even a lot of these projects which are getting recognized in the revenue line item these days they were launched on land which was historically acquired, and the land cost at that time was relatively, it was pretty screwed as compared to land cost now. So now the new projects that we are launching, I don't think we will have 35-50% kind of EBITDA margins, which we have seen historically. Those would be relatively lower, or more likely in the range of 25-30%. The plottage and the horizontal development township project would have a relatively higher margin number as compared to a group housing number.
All right. I appreciate it. That's all I have. Thank you.
Thank you so much. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Well, thank you so much for attending the earnings call of EHL. Thank you for coming today and for your interest in the company. Bye.
Thank you. On behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.